What do you do when you tried and failed and you want to quit and you want to give up?
People that are hungry are willing to do the things today others won't do in order to have the things tomorrow others won't have.
You have to make sure that your dreams, your aspirations and goals are so big that not accomplishing them is not an option.
I don't know what that dream is that you have. I don't care how disappointing it might have been as you've been working toward that dream. That dream that you're holding in your mind, that it's possible.
To all of you fighting battles alone, to all of you going against the grain, battling the naysayers, stay strong, keep going. Stay strong, keep going.
I need all televisions off. I need cell phones off. Listen to me. Some of you are going to be broke for the rest of your life because of that little thing on the side. You're going to be broke for the rest of your life because of a little cell phone. I need you to study like you've never studied before. I need you up all night long studying.
What is there that you know you need to do, that you want to do this, but for some reason or another, you've been holding back? I think that among the things that prevent us from acting is the fear of failure. And if you've already failed, you don't want to fail again. The pain of that, the disappointment, the fear of loss is another thing. Because many times when we do those things that we know we need to do, we feel that we might lose somebody that we love very much and care about. We don't want to hurt anybody.
I'm going to tell you something that every successful person has to do, including you. Believe it or not, every successful person in this world has jumped.
As Karl von Clausewitz said, pursue one great, decisive aim with force and determination.
When people tell you can never get done, you stop dreaming and you go back to knowledge.
Find that thing that makes you come alive. Focus on it. Everything around you, the opportunities, the fact that you're alive.
And we've all had experiences where we were working on something and we knew it was possible. And we did those things that were necessary to bring it into reality. We took the responsibility to make it happen. Other people couldn't see it. A lot of people didn't believe it. You were attacked, you were criticized.
It has nothing to do with opportunities. You've been given opportunities. The problem is you're not operating in your greatness in that opportunity. So that's why you're stuck on that particular level.
People were opposing you, but you kept on doing it. It was hard, it was rough, it was difficult, but to you, it was worth it. And eventually you got to a level you know, can nothing stop me now.
Anything you're struggling to try to accomplish, whether it's health or love or relationships, whatever it is, if you're struggling, it represents a simple fact. Your subconscious programming doesn't support that conclusion.
I dare you to use your imagination. I dare you when you're broke to use your imagination. I dare you when you're rich to use your imagination. I dare you under every single circumstance. Keep dreaming. Keep looking at your dream.
Because that is how you bend the universe to your will. That is how you impress people. That is how you capture the human imagination. And if you want to do something extraordinary and be remembered, you've got to get so good that you're performing at a level that has never been seen before. That is the only path to set the bar ridiculously high and then surpass all expectations. You can't put it down low and then beat it and say, whoa, look at me.
We say that in zero-based thinking, you ask this question: is there anything that I am doing today that, knowing what I now know, I wouldn't get into again today if I had to do it over? We call this a QUINK analysis. Knowing what I now know, QUINK. In times of rapid change, there are always areas in your personal and business life that, knowing what you now know, you wouldn't get into again today if you had to do them over. Your willingness to ask and honestly answer this question is the key to remaining flexible and quick on your feet in times of turbulence. How can you tell if you have a zero-based thinking situation in your life or business? Simple. Stress. Whenever you experience ongoing chronic stress about any person or situation, you should ask yourself, if I was not now in this
What do you do?
What the relentless system does, it's a mindset. Before you have an exceptional skill set, okay, you have to have the right mindset.
The fighter jet mentality is that someone who is just determined, relentlessly obsessed in achieving an outcome in the face of all adversity.
I've always had this relentless mentality, and if you say I can't do something, if I fail, if I, mess up, it just motivates me even more. I just become even more hungry.
You've got to start with that belief in your mind. I've got this. I can do this. I can conquer this.
The relentless are unstoppable.
I didn't want to have to say, I wish I would have done more. You gotta put yourself in that cage. I switched my mind to something else. I switched my mode into something else. It's go time.
But the difference between me and most people is you might be sweeter than me. You might be bigger than me. You might grind. Listen to me, I don't know. You might have money. I don't know where you come from, but you will not outwork me.
But when I'm in that cage, bro, don't touch me. Don't talk to me.
All in, emotionally and executionally, in theory and strategy and in execution.
If you want something, you have got to be relentless.
When you're sitting there, you're trying to sell your product, you're making phone calls, you're giving a lecture, whatever it may be, you're driving a bus, you're a doctor, whatever it may be, the stronger your mindset is, the greater your skill set is going to be.
Make a declaration to yourself. Declare all out war. It doesn't matter about what happens to you. What matters is, what are you going to do about it?
They start their school on Monday morning watching me. They ain't got a daddy. Their daddy in jail. They don't have a brother. Their brother's in jail. They all I got. You don't understand. My son's at Michigan State, and I pay for it cash. My daughter wants to go to Harvard. You don't get it. My sister just had a baby, and she ain't making no money. A game. All I got is an A game. I ain't got a B game. I ain't got a C game. When I finish, people are relying on me. Some of y'all, when you get on the field, you forgot what it was like when you was hustling in high school playing ball, when you were in college hustling to get to this point.
If you want something, you've got to be relentless. You've got to decide, I deserve this, and I'm going to have it.
What's up, everyone? Can everybody hear me okay today? Type 1 or something. There you go. You guys can hear me. If at any point you can't, let me know. All right. All right. I hope everybody's had a really, really good. I think this is the first Furious Monday we're doing since New Year's. So happy New Year to all you. Hope everything was great. Hope you caught some pips already. Let's get started. So for those of you who don't know me, I am Yuri the Fury and the owner of Furious Snipers. Everything you're gonna see today is strictly my opinion, and will not be held liable for your trades or anything like that. So I'm not a financial advisor. But yeah, so the way this always works. Wait, first let me see if we got everyone here. Most of you been here, I guess. Brisbane, Australia, man. What time is it in Australia right now? I don't even know. That's some appreciate you. 10 a.m. Oh, it's nice. It's not like Europe. I'm sure there's some people from Europe here though. I appreciate you all for tuning in. Okay, so today we are going to talk about a few things. There was a request, I guess, in the chat somewhere in one of the chats that I'm in, to explain the difference between order flow and structure. And then there was also, I had a ton of breakthroughs for myself. So we're going to talk about Wyckoff. We're going to talk about Divergence and an amazing Monday morning that was supposed to be uneventful that is having me personally at 1 to 20 to start the week. So what was I going to say? Yeah. So first of all, one thing that I had a breakthrough with is mindset, right? And I don't know who all you on the stream. Some of you all been on Thursday's Ask a Mentor with Mike Azevedo. That was freaking phenomenal and awesome. And then I don't know if shout out. It's important to talk about our mentors. I personally myself don't know everything, nor do I claim that I know everything. So it's always important to not have your ego in front of you, no matter how much you know. There's somebody who knows something better or talks about a different angle or something like that. So I constantly keep learning and improving. So I want to give a shout out to a person that probably doesn't know who I am, but he will, because he'll come to our stream. It goes by the Pips of Persia. I don't know if you know him or if he's on the stream. What's up? Anyway, so this guy is phenomenal. I just found out of him, and so first of all, what I learned is from Mike Azevedo is that I need to chill the fuck out. Excuse my language, but that's basically it. What I mean by that is just simply, no need to rush things, right? Because I'm one of these people that I'm patient. I'm really, really good trader, but I don't like waiting. So I'm working on myself. And I mean, I always execute setups, and my big trades are my big trades, but in between my big trades, I do a ton of little scalping trades, which probably are the only ones that I lose. Other thing is that I learned is I started journaling like crazy, and it helps because for me personally, if I do lose the trade, I like to know why I lost. So my advice to you, or especially if you're struggling or people that are learning, is chill the fuck out. Like, stop trying to rush into shit and basically do your back testing, research, train. Just like when I trained in martial arts, the battle was won in practice. The battle itself wasn't that much. It was all about practicing. So the same thing here. The more you backtest, the more it will click. All right, so enough of that pep talk. So I just want talk to you about order flow. So for those of you who are confused about what order flow is, and you want to know what it is, it's in simple terms is the consecutiveness or the series of institutional candles, order blocks, whatever you want to call them, um, in progress. So let's say we're looking at GU, and we have an institutional candle here on our block that goes up. We have another one goes up. We have another one that goes up. Then it mitigates another one that goes up. You see this? So all of these are in consecutive. So not only structure is bullish, right? But also the order flow, meaning the order blocks are lined up upward, and we have the bullish order flow. Now, sometimes it's the same with structure. Sometimes it's not. So how do you distinguish the two? So the process is pretty simple, but let me show you. Since I'm on GU, I'm just going to do a GU. So if you were to do just a structure analysis, doesn't matter where, like right here, right on this time frame, you would do something like this. Oh, mother, hang on, guys. I forgot to start recording. I know I'm recording on YouTube, but I want to record on the cloud too. So sorry. Apologies for the ones who are tuning in and recording. I didn't record the first few minutes. But anyway, so let's say we're going here and we're just marking up structure. And for those of you who understand structure, know that the only lows and highs that count are the ones that create the following high. So this low creates this high, then the higher low creates this higher high. This low creates this high. There's no low after that. So basically, there's no real actual structure point up until, maybe here, but I would say here, there's a high, a low, a high, boom, right? And then this small internal structure is broken to the downside, but then the next point of structure is literally over here. This is the last low, if not here, right? So you got all of this, and until this point is broken, or even this point, or even this point, until this point is broken, you're not really on a downtrend. You're in a retracement to go higher, structure-wise, right? So even if you say, okay, well, this one, all of this is just a retracement until this order block fails. But the order flow has shifted right here when the internal structure got broken, but it wasn't. So this is how you see it. So the first thing you see is this is the order block right here, right? And it created a new high followed by a new high, although this already, this wick took it out. So the moment that you actually close below the last significant order block, which is basically to say the last point where institutions got into the market and manipulated the market to the top, the moment that point is broken, you need to look. And this trend line so far that I drew, it's not a retail trend line, it's the momentum trend line. There's a difference. More on that later. But as soon as the order flow is broken, aka internal structure here, you look for an exhaustion or a mitigation from the top order block. So now the order flow is shifting because we're no longer mitigating from the bottom. We have taken the liquidity from under this last order block, and now we're mitigating from the top. Now, finally, we break another point of structure here that we just formed with that takeover. And now, if you want, you got a super confirmed switch of a trend. Until you're really, 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 really comfortable with that type of trade, I would not recommend trading like this because it's going to get you in a lot of trouble. First, learn structure, then try to mess with order flow. A lot of times they're the same, they match, but most of the time they don't. Order flow shifts first, then the structure. So same thing here. If you switch to smaller time frame, you can see, okay, this was reaccumulation, all good, but you have this order block, you have this order block, you have this order block right here. This institutional candle, boom, we broke the highs, we swept the highs, right? And then what happened? We took care of this order block that took this structure, right? Okay, and so you have to kind of switch to 3 minutes or 2 minutes because that's a wick, and you want to see the body. So here's the body. So now you have your institutional candle. You can refine more all you want. We took the internal structure, the order flow shifted because we failed to make a higher high, and now we're mitigating from the top, so order flow is now becomes bearish. Structure becomes bearish when this point has been taken care of. With structure, when the structure got broken, you can enter over here, but then you'll be late, which is okay too. It's much safer than an order flow, but you're also missing a lot of pips. Does that make sense on this? If you have any questions, go ahead, put them in Q&A. So it's not really a hard concept, but it's unless you actually start looking and adding it to your Confluence and backtesting, you're not going to get it right. You coming up with things like this. Oh, see, it broke the trend line, and I'm only using it as a guide and basically putting it not at every single point, but at actual point near the point where the actual institutions get in to the market where the manipulation happens. So the trend line that gets manipulated for retail traders would be something like this, right? Bounce, 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 and then boom, there is no institutional candle here. That's an institutional candle that matters right here. But that is a mitigation out of it. That's a mitigation out of here, but there's nothing to mitigate out of in this point, right? Or if you do this type of trade, that's a retail trend line as well. You're just putting range just because it bounced here and think it's going to work out right here, and that's where you get smoked and then it goes up. Completely different. Oh shit, sorry, my bad, guys. Yeah, I was saying this is the trend line, and this is a trend line that retail people use without understanding anything. And although this is a valid point of an institutional candle, that is not. That is just a touch retracement. I mean, but there's nothing going on here, right? There's no IFC of any kind. This is just a simple retracement. Okay, so that's it for order flow versus structure. It is a very good way of anticipating the change in behavior, especially when it comes to your IFC, or sorry, POI. And it's really good for essentially spotting your spring or UTAD when you are looking at Wyckoff. Now I want to talk about Wyckoff a little bit. Again, shout out to Mr. Pips of Persia. The man is legend. Now, I trade Wyckoff for a year. I consider myself pretty savvy with it. I've done a million different schematics. I've shared a million different schematics. It's all good. But I watched a few of his videos and I had a breakthrough. Who knew? I can learn something new about Wyckoff that I didn't know. So, and the only thing he said, out of all his videos, I binged one to the hell of it. All of it is pretty nice, but out of everything that he's got, there you go. The man is a legend. I'm gonna get him. I'm gonna try to get him for the next Ask a Mentor. It'll be badass. Just go to YouTube and search Pips of Persia, and then look at introduction Wyckoff videos, and you'll see what I'm talking about. He's an IM. He's definitely part of IM in Traders Empire. But anyway, so I don't know him personally for now, but I will. I hope. Anyway, so one thing he said in his video, what's the heart like, guys? Here's a question for you, and there's no right answer. Just give me a bunch of answers. I am looking for something particular though. What do you think out of all schematics that you know in Wyckoff, what do you think is the hardest thing about it? Just give me some answers. Type it in. The start. The start is the easiest thing. The start, you just chill at the start. At the start, you just look. Oh, look, there's buy and climax and an automatic rally, and either secondary has a signal strength. Sure, but you don't execute your trades. Not even close to executing your trades. You're just watching at that point. So many variations, exactly. Reaccumulation. The reaccumulation is actually the easiest schematic. If you need more help, reach out to me later. There you go, Johan. Very good. So the hardest part, I think, and I can be wrong, of course, but the hardest part is to distinguish between distribution and reaccumulation, or redistribution and accumulation, right? But it's not. The guy is a genius. All he said was accumulation or reaccumulation, and write this down, guys. This will help you, I guarantee you. The reaccumulation or accumulation is simply the manipulation of the lows so we can go higher. And distribution and redistribution is the manipulation of the highs so we can go lower. It's a very simple sentence that has a ton of value in it. Again, right, Ruben? Accumulation and reaccumulation is the manipulation of the lows so we can go higher. And distribution and redistribution, I'm getting there, Johan, is the manipulation of the highs so we can go lower. If you repeat that every time you look at a schematic and you're not sure what it is, if you repeat that and look at the market, it will be like looking at a goddamn without even any confusion. So let me show you what I mean. Let's go to gold and do a proper analysis. So you got daily, right? I'm gonna erase everything here for a second, right? You got daily, and on a daily time frame, we are super bearish right now. Correct? We got our high, a low, lower high, lower low, lower high, lower low, equal high with the target to go up. On a weekly, we're bullish, but on the daily, we're bearish. This has not made a lower low yet at all, and it might not. We might turn around because now we got target all these three equal highs or semi-equal highs. But if you look closely, where are we in the market? Right? So if I look in the market and I draw this line right here, not a line, I would say an area, as someone would say, over here, right? Yeah, Jamal, no, I want to actually come up to stuff that's marked up. I just want to mark it up right now, real fast. I don't want to redo everything. We'll be here for 3 hours. Anyway, so yeah, so this area right here, as you can see, serves as our supply zone, because right from this area is where people were buying. You see, they were buying here, they were buying here, they were buying here until they died, right? And they were selling here, and they got killed. They're selling here once again. Right, so this area is one thing, is supply and demand area. We also see this area right here, right underneath here. That's all of these equal lows, right? We had to wick through it to shake them out, but we had these equal lows here lined up. Okay, there's a method to my madness. Hold on to your horses, it'll all make sense. All right, so I kind of highlighted the areas of previous reaccumulation. Here's distribution, redistribution. And now we're here. I wonder what this is. So it's very easy as you come into the market. This is the second thing Mr. Pips of Persia said that I was like, oh, that's how I explain it. I couldn't explain it to people before. But this makes so much sense. What do people do that pisses Yuri off a lot? They marry the goddamn schematic and they try to match the schematic to the picture, right? That's what you do. You start looking, oh, this must be preliminary support area. This must be selling climax, automatic rally, ST, boom, boom, boom. This must be the spring. Now I just got to wait for the test and go up, right? That's what you do. That's what people do. What did I say that he said the first thing? Distribution and redistribution is manipulation of the highs, and accumulation is manipulation of the lows. So what is getting manipulated? If you were a retail trader, what would you do in here? Would you consider this a resistance, and this a resistance, and this a resistance level, and current resistance level, and you would try to sell? Or would you consider buying anywhere here? I know this looks like equal highs to me. This looks like equal highs to me. This looks like equal highs to me. So I see this, I'm like, I am the best trader in the world. Let's just sell from resistance. And what happens to people that sell from resistance? They get smoked. We're making a higher high here, smoking all the people that are selling here. After a few bounces, we're breaking, right? Taking the money here. Now we made some here. We made another target. We made another target. So we're actually manipulating the highs. We're just annihilated all the buys if anyone was buying here. On top of that, there is this little tool I call RSI. I don't recommend using it for entries anymore, although a long time ago I was. If you can see that as we're moving down, the RSI is also moving down. If this was accumulation, I guarantee you, as you were moving down, like right here, right? I don't want to switch to 15-minute, but trust me when I say we're moving down here, moving down here. As we're moving down, the RSI is going up. As we're having this spring, we're actually going up, right? Which means we are accumulating to go higher. Whereas here, as we're going down, we're also going down, telling you that we're distributing, that this is correct. So currently, we are at We're manipulating the highs, and we are at this equal high level. If we drop down even further, we can see I already went, yeah, exactly, John, right? Look at the momentum with which we go down, right? That is not a retail trading. That is not people trading. This is the institution going, boo! We're breaking structure to the downside. If you want to use structure, we're not nearly going up yet. Also, think about what happened on Friday. Where were we on Friday? No, not even that. If you look at the daily level, right? We're looking at the daily. Do you really think that, first of all, you can see this manipulation area where everything started, the source from which the institutions bought? Remember, they execute on the daily. They don't sit there and day trade or intraday trade, right? This is where it happened. They swept all of these lows and then went up back. They didn't have enough juice to take this liquidity, so they need to create liquidity, grab it, then go up, right? Yes, Sam, that's in layman's term, but do not try to execute trades based on that, because you're going to hurt yourself in the process. Just understand that identifying the field, other confirmation that you're accumulating versus distributing, the RSI will help you with that. But look at this, right? The level at which we're sitting here, institutions don't buy at support. Institutions buy lower. So what's going on over here? They're getting all these buyers that I can't wait to jump. They're getting rid of the sellers because they're manipulating the sell side. But right now, they cranked it down quickly as a quick sweep, and they're getting all these buyers that, oh, look at me, I knew this was a fake. Now I'm good, right? I'm good. I'm going to get on board and go in the buy side. So they're getting all these early birds on board so they can go to this IFC here, right? Grab all these highs, go to this IFC, potentially take the Asian range, which is going to develop, right? And then crank the market down into the real area where they want to buy, which is way lower at about, in this area, 1790 to 1760. In this area, I am not putting a pending, but I am really watching this area closer, 1773 to 1770. Because I found a perfect, and I shared this in all the discords. So you should have this chart on 5 minutes, like way going back over there. Anyway, I'm not gonna go all the way here. There's perfect equal lows there, and the source from which everything started. So I do think this is the redistribution, but either way, I'm chilling because there's no reason to rush into any trades, which is what I learned. And I'm chilling. I'm doing cool. All right. So I think that was, I got to take a breath. I'm talking a lot. Yeah. So, this is where people are like happy because You know, they're all buying over here. They're all buying over here, buying over here. And now from here, they're going to be selling. They're going to be pending orders here. And there's buyers that are going to try to get missing out, you know, fear of missing out over here. All the buy stops will get activated. Will come here and drop. I think it'll come here. The reason I think it'll come here is because of before. So I sniped this thing with order flow technique, but you could have seen Wyckoff distribution too, whatever floats your boat. This is all the same thing. We were over here, if you guys remember, but I think 2 weeks ago or something, and we had this ginormous drop that no one could predict, whatever. What's an order block? For those of you who all watch my streams, what's the institutional candle for sure? What is it? Somebody quickly define it to me for me. Nobody? What's a true IFC besides the one that makes the next low? There you go. Thank you, Jameson. Damn, I should have said none of my guys. It's the last candle that gets engulfed in balance, which means it's this doji right here. It is this doji right here. I just like to mark up the general area, but technically it's this little doji is the institutional candle. It does not have to grab liquidity. Why? Because it does not necessarily have to be an AFU. AFU was here, it got mitigated, and this is the last institutional hedge candle before which we melted. So if we go here and we're just like a wild Yuri that he sometimes turns into, we can just put a pending there and it will go bing, and you'll be good. But if you want to actually not gamble, but instead execute trades based on confirmations, and you can go to a small time frame. What's up? Just ask your questions, guys. You go to a small time frame and see where the order flow shifts. I think I had to go to 1 minute, I believe. Ugh, hang on. Let me actually do this. There we go. The last push up, boom. It gets taken here, completely taken here. Very easy to see. The last candle with imbalance right here. We mitigate, boom, sell. Order flow shift. So the same way, I think current situation on gold will involve us coming here. This is all taken care of, mitigated, but here's the last imbalance. And the last candle that gets engulfed with imbalance is right here. On 1 minute, it's down to this. So when it gets to this area, I'm going to look for order flow shift and probably sell there. Now I just wanted, if everyone doesn't have any questions about Wyckoff, I wanted to show you the beautiful morning of divergence that we had this morning and how you could annihilate the market like I did today. Last time, okay. The questions. Why do exits? Okay, wait. Do you usually look for a schematic with a higher time frame, say an IHP one? Yes and no. So looking at GU. So I started. So if you can see, I actually did my schematic on 1 hour. Yeah, I'm sharing screen. Hold on. All right. Sharing the right screen? I don't know. Hang on. There's too much stuff going on. All right, so I actually did my schematic here, right? We have bind climax, automatic rally, signal of strength. I do think this is reaccumulation, giant reaccumulation. I might be wrong, we'll see, but again, what's manipulated? Look at this daily, right? We're super bullish. We just mitigated out of this bullish daily candle and had this giant push up on 4 hour. We mitigated out a perfect institutional candle. We just broke structure, by the way. Awesome. On here, if you look, we have a target at the top. We're not in any kind of area of support and resistance, but resistance is here, so we got the target. And then in this big schematic of reaccumulation, if you go to a smaller 15-minute, you can see that when the market came here, it all of a sudden got rejected and stayed within this range, given this an initial reaction. I marked this as selling climax, an automatic rally, and then you have the manipulation of the lows. You have the manipulation of the lows here. We take this liquidity. We have the manipulation of the lows here. Now we're here. Now we have the manipulation lows one more time, and then the order flow shifts. So what I say, order flow is really good for foreseeing the spring in the test. Boom, order flow shifted. What's more important, where it happened. It happened in confluence on multiple time frames here near the midline of a previous Asian session in the last candle that gets engulfed with imbalance. And it happened right underneath this Asian range. Now, the cool thing about this is not just textbook, this is so algorithmic, I can't even begin to describe. If you were to measure this Asian range, you would get at 38 pips. And then if you want to measure from this Asian range to this wick, you would get about 38, 39 pips as well, meaning it actually took one standard deviation of this Asian range to get to a spring, making it a perfect ICT. Thank you very much. You taught us well. Perfect one standard deviation for Asian range take before moving higher. So there's that confluence. But what is Yuri's bread and butter? It is divergence. So if we were to go to GU and EU, the most popular divergence of them all, and we were to open the charts, can everybody see it, or do I have to point it out? There we go. We're moving down. We're making lower lows. We're making lower lows. And then we're making a higher low while EU continued on its way down, because EU actually, as opposed to GU, I think is in redistribution the same way gold is. Funny how I'm completely calm about that. So now we had this divergence, which was perfect. And if you go, I mean, there was so many confluences. It was like they just got lazy. This wasn't even hard. This was boring. It was so easy. I mean, you can do whatever you want. You can do divergence and get in here. You can see that you can just play simple structure. We came down, then we broke the high, and there's imbalance with an IFC right under here, and that's exactly where we go, right into the spot. You can use what Siva teaches in his stuff for those of you who know Siva. And here's your check mark, Nike check mark. whatever you want. This trade was here for everyone to do. You can do 1 million lots over here. You're not going to get smoked because there's everything telling you we are bullish. On top of that, there was another trade on GJ. At the same time that this was happening and GU was diverging with EU, GJ diverged with GU on 3 minutes a little bit earlier. Well, look at this. Oh my God. If you miss divergence, not to worry, there's a perfect easy re-entry that comes a little bit later, where in the last candle that gets engulfed with imbalance. Man, I can do this all day. This was such a beautiful morning. I did this all from my cell phone without getting up. All because I just looked at some stuff yesterday night. So yeah. So very chill, very cool. Both GJ and GU. GJ could have been entered here. So was GU pretty much, but you could have re-entered both there. You could have re-entered on Divergence. You could have read Wyckoff accumulation and this being a test. You can do all of that in Confluence to give you 700 different confirmations. Whatever you want, it worked. The only thing that didn't work is people that buy off trend lines and resistance stuff. Those got smoked. Did I miss anything? I think these were the two trades that I was in. Now, be careful. Yeah, it was beautiful. It was such a beautiful morning. I was like, oh my God, I hope everyone's seen this, not just me. Then I saw a bunch of charts pop in about Euro USD being an accumulation. I would be very careful about that judgment. Right now, it certainly looks like one, so congrats if you got into that one. Mitigation was the test. Yes, I think so. I don't know because the schematic has to still unfold, right? So if you look at GU, right, this is what I learned also from Prince of Persia, just from binge watching the freaking thing. If you look at higher time frame, all right, you look here, we don't know if it's actually bullish for sure until we go above this, right? It could be that once we break this or make an equal high and we mitigate out of here, that we come back into this area or into this area and do another test or an LPSY. It's already coming down, right? It's doing the Asian range. So it's possible that we will, maybe shoot up a little bit into here, mitigate it there, come down, mitigate, and then come higher. And maybe it will come all the way back down and grab this into here because we didn't really mitigate out of this last IFC here or the extreme area, which is here. It's possible. I don't want to predict anymore. I want to react. So therefore, we'll see what happens. I trade during New York. So yeah, it's possible. But for now, with everything I showed you, this to me was a test because this was a break of minor structure, right? Break of internal structure, order flow shift. So to me, this was the test, right? There is about a gazillion different variations of how actually Wyckoff plays out. The main important thing is what I said, understanding that there's a manipulation of the lows versus manipulation of the highs is how you would know what's going on. On top of that, if I bring up that RSI thing again, what are we doing as we're going down? We are going up, which means we are accumulating. All of this, as we go down, we keep going up. There you go. So that is the biggest thing I wanted to show you guys. Divergence happened this morning. Oh, yeah. Yeah. So with volume, I'm starting to actually move away from that, Mr. Ryan Billenberg. And that is because apparently, from what I've been reading, not watching, but volume is more applicable to the stocks because there is no real true volume in Forex. Certainly has a lot of sense with Wyckoff, but it's just kind of unreliable when it comes to Forex. Right? They gotta use the right tools for the job. But yes, if that's another confluence, then hell yeah. All right, any questions? So Pharaoh, I hope that answered your questions. Why do institutions execute on the daily? Because who are institutions after, Mr. John, right? Who are they after? They're after hedge funds and other institutions. They're not after your money. You are damaged like fish, that little fish. They're after big fish. So the algorithm is what they run, right? The algorithm runs the same. Market is fractal on all time frames. Therefore, it tricks the same, institutions or hedge funds, 401k managers and stuff. They still trade the same head and shoulders patterns and what trend lines and support resistance, not knowing that the algorithm is built to go and show you what you want to see before taking you out. And the institutions, the smaller institutions, not the giant institutions, they don't trade with a 20 pip stop loss. I trade with 100 pip stop loss. But when gold just tanks like this and you thought this was support, it doesn't matter how far your freaking stop loss is, you're losing money. Institutions don't execute orders off small time frames. They're in it to win it in the long term. Sometimes they because remember, institutions do not pay swap fees, right? They don't have the broker like we do. They don't operate with a broker. They're providing liquidity. They're the ones that have all the money. They can hold the position for a year if they want to before they mitigate out. Because there's no, I keep saying that, like, people with a lot of money, like, they don't necessarily need to trade and risk 1%. If you have $1 trillion in your pocket or several billion and you trade with millions, it will make a difference in the market, but it's not going to take, you're not going to have a dent if you don't have swap fees and you're just holding, 0.01 of your equity. So it's one of those things. All right, that's all I wanted to show for today's Ask a Mentor. Kind of went fast. So does anyone want to look at anything else during the market for the general public? Sam, where can you learn? Are you part of IM or not? Oh shit, that was already answered. Yeah, so you can reach out to us. You can reach out if you're in, I don't know which audience you came from. Forgive me. So if you're in Mike and Sam's group, you can reach out to those guys. They're excellent, phenomenal guys. You can reach out to our group. You can join our paid group. It's a squad that we got. and trade with us if you want. You can, I mean, the sky's the limit. If you're in IM, there's a gazillion amazing educators there in Trade House. So just depends style of your learning, what you want, your budget, whatever. Yeah. Why? Okay. Any other questions, guys? Who got any value today? You think it was worth it to get up out of bed? Okay, thank you, thank you. All right, so yes, I'm going to look at a lot more Wyckoff style trading but you know, my bread and butter is still going to be Divergence because it's the best entries in the world. But now it actually makes sense. Like I can look for a schematic and understand always what I'm looking at. J10 Fig Trader, reach out to me directly after the stream. Jamal, it's okay. I'll help you out. I'll beat you up later after the stream. Furious Snipers is the business that we run, which is a mentorship group. So reach out to me after the stream and I'll tell you everything on how to join and all. Thank you, Arthur. So yeah, let's look at something else. Let's look at, let's say, I don't know, who likes UJ? Let's look at UJ. So, by the way, in order for you guys to understand, this should be the way you analyze the market from on. I recommend every single one of you does this. You start from weekly or daily. Oh, there you go, Jamal. So it'll be good for you. And you will find out the structure. You find out structurally, are we bullish or higher? So something like this, right? I can mark out each time frame what they're doing, right? After you do this, you start looking for a schematic developing on 1 hour, on 1 hour or 4 hour, and you mark out the POIs, the points of interest, the possible supply and demand areas. After that, you're going to move to 15 minutes and mark out more detailed stuff, possibly see if we are manipulating the lows and the highs. And finally, when the price gets into your area of interest, you're going to switch to 5, 3, 2, 1 minute to refine your entry, as well as actually look at order flow and look at what? Divergence. When all of those things come together, you can predict the bottoms and the tops of the market. You can get an amazing entry, and your stop loss is usually not more than 3 to 5 pips. And that in itself cures fear of missing out, cures overtrading, cures fear of losing money, cures all the problems with your psychology. And it's one of those cliche things that they say, you know, measure 7 times before you cut once, quality over quantity, and all that stuff that people say. It's actually super true in here. So with UJ, this is really interesting. So weekly, we are definitely bearish on this time frame here. You know, monthly, we're probably bullish because we made this high. Actually, yeah. But on UJ right now, we're bearish on daily. But if you look at 4 hour, and we made a low, and then we broke this high and made a higher high. So on 4 hour, in the moment, we are bullish. Right? So until we break this low, we are bullish. Well, someone might say, but didn't this break structure over here? Yes, but I'm going to tell you that this is internal structure because your external structure is here. So this was the low, and this was the high that the lower high that created this low. Now this low created a higher high than even this. So until this low is broken, all of this in between is nothing more than a complex pullback. So knowing that, you got, stop this. You got this. Can I? Yeah. And we expect some kind of the pullback to continue most likely. And this would be the first area to look at. This, for those who don't know, is called a breaker. And right here is our source. So the market will most likely come to these two areas, expect a reversal from somewhere from these two areas. So then you go to 1 hour and you can see there's some kind of schematic developing here. And to me, even though at first some people might say, oh, this is distribution because look, we're breaking structure to the downside. Ask yourself a question, what are me manipulating? And I can tell you that this is where people are buying. So if this is where people are buying and we are breaking this level and then keeping within here and then breaking and keep it within here, we are manipulating the lows. Why? And go higher. Therefore, to me at this point, UJ looks like reaccumulation, this being still your if we just go through this exercise, right, and say, okay, well, this is the buying climate or selling climax, my bad. Oh, Jesus. Selling climax, and this was the preliminary supply. I don't really care for it too much. Anyway, so then this is your automatic rally. And you got your ST over there, and this is actually the SOS, but then you can say maybe this is actually the selling climax and this is the ST, and you stop, and this was the AR. Doesn't matter how you mark it. This whole level of support here makes me think we are in a complex pullback and we're about to have the continuation here to have a shakeout, followed by a creek, jump the creek, or a creek followed by a shakeout, I should say, jump the creek and so forth. You can learn the reaccumulation schematic. There's also a ton of variations. There's 4 main ones. But anyway, so I don't really trade UJ, but that's what I would be looking for if I was trading it. At this point, we are still bearish in this part of the schematic. So, I wouldn't buy anywhere here under no circumstances. So if you're looking for a trade right away, again, it's cool to chill. But there's a possible trade here. There possibly is a trade over there, but I don't think it will come there. I think it will just come here above the Asian range and drop either here or here. So these are the areas to monitor for you. And then you go through the steps I said you should go through. If you are looking for divergence and your favorite pair is UJ for some reason, if you like watching, flowers grow, then you can compare this against the USD CHF, another sloth of a pair, and see if there's a divergence between them two. almost impossible to identify divergence on 1 hour during the consolidation. So you gotta switch to like super small time frames. Yeah, no divergences right now. But now is not the time. Now is Asian range. Okay, so this was a good stream, guys. I hope you enjoyed it. I really appreciate every single one of you. Oh, wait a second. See my man, you gotta make me work, Roger. I don't know where your question is. Is it far? Why do some traders use so many time frames? What does that do? So on divergence between, okay. Roger. On the divergence, can you explain how you know which one to take? Somebody hasn't been on my stream. Roger, you always take the one that is mitigating. So the divergence has 3 main rules. One, you have one has to take liquidity, one has to mitigate. 2, well, actually, other ways around. That's the second one. The first rule is if you are on an uptrend, you start measuring the tops. So you're going from the top, higher high, higher high, higher high, higher high, until you have a lower high, which is the divergence. And the other one, you also do it at the same, the same place. So let me come back to this and share screen, actually, since I'm not sharing. I'm almost there. Yeah. Share screen. Boom. All right. So guys, all right. GBP, USD, GBP, JPY. Today's divergence that happened. Oh, yeah, on 3 minutes. In this case, you would have taken GJ because what divergence shows you is the relationship of the pairs. So it tells you that in this case, between these two, they were from here moving down, right? They're moving down, making lower lows. And then this one is making a lower low, where this one is making a higher low. So what this tells you is that even though this one is still grabbing liquidity, that means that GBP is still weaker than US dollar. And US dollar and JPY are very close to each other, hence USD JPY being a slow pair. GBP JPY, on the other hand, it shows you that GBP already gained strength against JPY, which means it's stronger than JPY. So while this one can continue on its way down, meaning you can have divergence hours, which means one is going this way, the other one's going the opposite way. So you don't take the one that's making a lower low, you're taking the one that's mitigating and making a higher low, because it's already showing you that the order flow is shifting and the GBP is now way stronger against JPY as opposed to GBP versus USD. And so you always take the one that's mitigating. Yep. Makes sense, Roger? And Jamal, the reason you use multi-time frame confluence is because realize who gave you trading view, right? The same people that gave you head and shoulders. They want you to use these predetermined time frames, right? So some people use odd numbers because the order block or the IFC on the smaller time frames, it can happen within like 7 minutes, and you're not going to see it on 5 minutes, but you'll see it on 7 minutes. So some people use different stuff, and you want to have multi-time frame confluence. Other than, you don't want to be married to one time frame, because what might look like a downtrend on GU is probably a retracement lag on 4-hour. And when it's over and order flow shifts on 5 minutes, you're not still thinking this is bearish. You're thinking that's the time to execute, because that means the retracement is over and the expansion will about to begin. Ah, motherfucker. All right. I am showing my screen. I was showing my screen. I thought. Yes, that's a very good point, Roger. You do have to wait for break of structure. The way how break of structure with divergence works is the first leg from which divergence spans has to go up, break some kind of internal structure before it comes down to mitigate. If there is no break of structure to the top before the divergence happens, that's a bad divergence. Very good point. All right, so once again, if you have any other questions or you want to join our squad and want to trade with the best guys, we have the best guys on our squad. You can reach out to @LordFury83, @RyanBillenberg, or @FuriousSnipersLC. If you want to learn from Mike, reach out to Mike. If you want to learn from Sam, reach out to Sam. If you wanted to learn from any one of our guests and ask a mentor, reach out to them, guys. Don't be afraid. People that lose are the ones that are afraid to ask the question, not the ones that do. There are no bad questions. So reach out to us. We don't bite. How do you know which pairs to compare? Mada, good question. Right there. Best friend of yours. Let me share my screen. There is this website called myfxbook.com. And then you go to market and then you go to correlation. Out here, you got a correlation chart. So you can do something like pick a pairs on the top by checking them, the ones you want to trade the most, or the ones you trade the most. Then on 1 hour, you can say, I want to see the pairs that correlate 80%. Let's say you want to see what GJ correlates with. You will click on GJ and it will sort all the correlated pair and it will tell you that currently on 1 hour, for instance, GBP, JP1, this is alphabetical order. I have everything checked here. But GU, for instance, is correlating with GJ 97%. It means they're almost literally identical right now on 1 hour. That's because right now there's no volatility, nobody's trading. But regardless, so then those two are really correlated. So if you switch to 15 minutes on the charts and they diverge on 15 minutes, even though on 1 hour they look almost exactly the same, you know that's divergence. Ryan, am I not sharing my screen right now? Oh my God, what the f is going on? I keep sharing it, it's not sharing. Is it sharing now? Jesus. Yeah, so what I was saying is you go here, pick pairs you want to trade. You pick pairs against which you want to compare. I just selected everything here. And then you click on, let's say, GJ, and you'll see what's correlated. Right now, almost all the market is correlated because there's almost no movement. But what I like to suggest, especially for beginners, is make sure that the first pair is the same, right? So like, if I want to compare GBP to something, I want to compare it to other GBP pairs and see if they're correlated currently on 1 hour. Also, you could do GBP and Euro, just knowing what correlates with what. This comes from experience and understanding the economies. But you will never go wrong if you compare GBP to GBP. The denominator will be different if you compare Euro to Euro, or if you compare Euro to GBP, or you compare AUD to NZD. But this is your best friend, though. If you don't have any kind of preferences, you just do this and look at the charts. So like Euro USD and GBP USD, 95% right now. So if I do this, you can see on 1 hour right now, right? From about over here, they're doing the same exact thing. All right, this is identical. And the same thing happened on 15 minutes. On 1 hour, it was identical, but on 15 minutes, oh, sorry, was it 50? Was it 5 or 50? 15, yeah. So this one made a lower low. This one made a higher low. You see? Got to look close. What helps with this, guys, if you just create a vertical line over here, like wherever they start correlating, let's say over here, and then start going and seeing lower lows, swing lows, right? You want lower lows, not just any lows. Lower lows, lower lows, lower lows, lower lows, until you find the divergence. Because if you don't put this line from the point where they're correlated, then you're gonna start drawing weird things. By that I mean like trying to move this line to this line and comparing like from here to here, from the bottom instead of from the top. That you're breaking all kinds of rules. You want to follow the trend on the time frame that you're looking at. All right, I'm getting tired. Thanks everyone for attending. Love you all. Be blessed. Stay healthy. And I'll see you on the charts. My guys, I'm gonna share a new thing. Probably. Actually, I'm gonna do this. So because of the holiday, everything's messed up. So I'll just do a stream for everyone tomorrow morning, not just VIP members. We'll do some market analysis and live trading together in the morning. Take care, y'all. Have a good night.